Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to give you an update on the situation with Bitcoin, Ethereum, so cryptocurrencies, because honestly times are getting tricky and I made a video on a Sunday with my view. I got questions about buying the dip, so we are gonna talk about that in this video. We have seen that the first targets have been hit. So if you have seen the video, you know that I told you about 42,000 for Bitcoin as first target, which has been hit actually on the yesterday, as well as on Ethereum, which if you remember, I told you we were above that. If it breaks 3,600, basically 3,500 at that level over there, we can go straight down to 3,100, and this is what Ethereum has done. Almost very precise. Today we are pulling back. We saw actually the start of the day quite strong, but you see how the previous support has now become a resistance, and look at how it got rejected. Look at this shadow here in this candle, which it tells us that, well, the market is still weak, but now the question is, we touched those levels, the first levels that I told you. So is this the end of the cycle? We can say that now it has finished and then we will move back up once again, or is still quite early and maybe we can go down even more. So I will talk about that, what's my view. And so the only thing I ask you guys as always is please leave me another like, it's very important and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. So let's address the first question. Is this enough in order to end the annual cycle? Okay, now if you don't know what I'm talking about, actually I'll leave you the link down in the description of my full analysis that I made on Sunday. I don't want to repeat the same stuff, otherwise it doesn't make any sense and the video comes too long. Anyway, go to check it out, it is still relevant. And now, is this enough? Now, in my opinion, in terms of time, we are still short. If you go to check the previous video that I made, I showed you how usually Bitcoin does cycles, so monthly cycles, which are between the 22 to 35 days, okay, an average of around 30 days. Now here, if we take the bottom that we have done, we have just 22 days, okay. Now in my opinion, this is still too early, so we may continue to see weakness going forward. Then, even more importantly than this, we have the end of the annual cycle, okay, so 465 days, the one that basically started in the pandemic. Once again, if you don't understand why I did that, go to check the previous video, okay. But anyway, that day I told you that on average it should find an end the 7th of June. This is, let's say, it is not precise, obviously, guys, but it gives us an indication. And then, if you remember, I put this green box, which is with the time and the levels. Levels are the 42,000, so the first one, and then the second one comes from the weekly time frame. If we just delete all of that, it's here, $38,000. Okay, so here is how I have identified that area with both levels, so support levels and a time horizon. So buy the dip today and we are fine. Is the risk away? In my opinion, no. We can still continue to see problems moving forward. Actually, what confirms us that is that, look at, for example, even today, we started trying to push back up above 40, around the 46,000 level, but we got rejected. Okay, just my opinion. This leg down has not already finished. It can continue to just stay sideways for a bit, but in my opinion, inside that time range, we can have the last leg down and close the annual cycle. Now let's address the next question, which is buying the dip. Yes, no, where? Now, buying the dip, Yes, but there are different philosophies. Now, the first philosophy is that briefly, basically, you are a Bitcoin believer. You think that long term Bitcoin will continue to grow and grow and grow, so you really don't care where you buy. Okay, because you're gonna buy, forget, and look back in 10 years' time. So basically, whenever you buy, it's fine. Okay, according to that view. Now, for my experience, I can tell that there are lots of people that they are claiming to do that, but the truth is that they go there and watch their portfolio every single day, multiple times a day, and this is not healthy. It means that, yeah, you say something, but the reality is that you don't believe that. There is a very small percentage of people who are actually truly believer. The reality is that all of us, we are here to make some bucks. Okay, and we don't want to lose money, because believers, they make money so far, at least, but the truth is that they can go on and also go down minus 50, 60, 70%. This has happened many times. So if you are willing to hold that for a long period of time, as it happened, for example, after 2017, that's perfectly fine, but be honest with yourself, because I see lots of people saying that, but then when Bitcoin drops 5%, they freak out and they go out there hating on people. So the true believer buys, forget, and that's it. Now, if you are instead someone who likes to do things with a different logic, you like to buy and know why you're buying, the only thing, in my opinion, to do that is through technical analysis, because this is not, as an example, it's not Facebook, it's not Apple, it's not Microsoft. So if I have Microsoft that drops 40%, I have the fundamental analysis that tells me, look, it's cheap. Now, when it comes to Bitcoin, you don't have that. And actually, in my opinion, lots of people makes the mistake to say, well, look, 1 month ago it was at 65,000, so now it's cheap. No, I don't know what's the actually logic behind it, because you cannot really tell. This is just about demand and supply, and I don't know whether here it was cheap or expensive. I don't know whether here it is cheap or expensive. It is not a business. You don't have an objective way to say that. So how do you treat that? Or at least how do I like to do it, is with technical analysis. So for me, buying the dip, it is fine, but when it comes to Bitcoin, you should, or at least I like to have more of a trader mentality. Now, that doesn't mean that I do day trading, I don't care, but I mean for entries. Okay, so for entry price and strategies, I like to use more the one that a trader uses, not just buy because it's cheap, because I don't know whether it's cheap or not. So buying the dip. Now, if you buy the dip during a bull trend, basically what a bull trend is very easy. It starts from the bottom, and then every dip, the lows are still higher than the previous ones. Okay, here is very easy to see, actually. Look at that. Okay, so here is like you are in a train, you are in the back of a train, and the train is moving forward. You are basically taking the train, and the train will bring you on. Now, what happens is that this behavior has finished since the highs of April. And now you have that the lows are getting lower, meaning that the trend, medium-term trend, because here is the 50 moving average, look, is getting negative, has changed. So if you do buy the dip in this situation, you're jumping on a train. Here, the situation is different, because buying the dip here is that basically you are on the railway, so you are like over there, and the train is coming in your face, and you don't know whether it's gonna stop or not. Okay, so the risk is that you jump on the train, but the train continues to, boom, come to you, and it's painful. So buying the dip, where? Now, I gave you 2 levels in the previous videos, and those levels are still relevant. So the first level has already been hit. So the buy the dip strategy, according to a technical analysis, usually if you want to buy the dip, you don't want to buy all together lump sum, but you want to just buy a bit, and then if it continues to go lower, another piece, different entries. So the first buy the dip has already been hit. I told you that in my opinion this is not enough. The next buy the dip is 38,000. So inside this box it's all a buy the dip. Because we have also the 200 moving average that can be useful for a bounce back. Now, if it drops deeper than that, the next level is 34,000. And then in my opinion, which will be the extreme one, is here around 29,000. Now, what is the problem? The problem is that if Bitcoin closes the cycle, remains actually here, okay, so it doesn't fall too deep below the 200 moving average, we can still have the probability that the next cycle, because remember that after a cycle there is always another one, so if it doesn't drop too far below the 200 moving average, we still have the possibility that the next cycle can continue to be a bullish one, right, and make new highs. Now, what is the problem? In my opinion, if we go too deep, this is why I told you those are extreme levels to buy the dip. If we go down there, what's the risk is that nothing guarantees that the next cycle will be actually a bullish one. So we can just start with the positive part of the next cycle, but then go lower, okay, like something like has happened in 2017. So here is why I'm telling you that buying the dip when the trend is actually against you, it's risky. It's risky on an asset that doesn't have a well-defined fundamental valuation, in my opinion. Now, the next entry strategy, so we have the buy the dip. I told you the levels, but be careful, okay? Another strategy to buy in a situation like that, let's say it holds less risk in terms of technical analysis and likelihood. It's called the buy the breakout. Here we have this negative trend line over there. This is significant. I told you that it's going to be difficult to break above that, but in case in case you see that Bitcoin actually goes on and then pulls back a bit, but then after a while breaks above that and confirms, that would be another buy strategy, okay? That makes sense with technical analysis. So those are two approaches that I personally like to have with crypto, okay? This is different in stocks, but for obvious reasons. So otherwise, guys, you just buy and forget. It's not easy to do, I'm telling you, because lots of people claim they can do it, but then if the market goes against them, well, they freak out. Then you can choose your strategy and do basically whatever you want, obviously. Briefly, Ethereum, basically everything is the same. If Bitcoin still has to close the cycle, Ethereum will continue to be weak as well. We touched the 3,100 level around over there, and same stuff today. We are trying to bounce back, but you see how it's getting rejected by the previous support, which is now resistance. Once again, the buy the dip levels I gave you in the previous video. So here was the first one. I don't know whether this is enough or not. The next levels are, first of all, the 50 moving average over there, which falls very near to this area that I told you in previous video. So 2,600 and 2,500. Okay, this is another buy the dip level. Exactly the same stuff for Ethereum. The buy the dip, it doesn't guarantee that the next cycle will actually make new highs. So the risk when you do this strategy is that it might, like, I don't know, come here, bounce, but then just the next cycle will not be a bullish one. So this is the risk you are holding when you do buying the dip on basically a trend which is coming negative and on an annual close on a Bitcoin. But, well, you know what? The risk is always present in investments, okay? So the only important thing, in my opinion, to understand is that buying the dip, yes, but remember the risks, okay? Because usually we tend to use buy the dip as just a 100% sure strategy. But when it comes to actually crypto, in this particular phase, yes, we can do. If we want to be in the market, we have to do it, but it has risks. So overall, guys, I hope you find the video interesting, and leave me down a comment with what do you think. Are you planning to buy the dip? Have you already done that? Subscribe to the channel if you want, and as always, guys, have a wonderful day.